Hey guys, welcome back to Upside Down Data. In this video, I'm going to talk about EGLD, the native token of the Elrond network, and why an analysis of the upside-downside potential indicator, which is our risk indicator here on the channel, suggests that EGLD has more gas left in the tank, even after its impressive moves of late. So if you guys like the content, subscribe to the channel, give the video a like. Follow us on Twitter at Upside Down Data. We put out regular updates there about our UDPI risk indicators and more. So if you've been following the channel, you're pretty familiar by now with graphs that look like these. This is the price history of EGLD on a logarithmic scale, color-coded by risk. So each dot on this graph represents one day, and each day is color-coded according to the risk that the price was showing on that day. And when you see green, that means that the price was very low risk at that point. It means that there was a lot of upside potential and relatively limited downside potential that was realistic for the near future for EGLD. And when you see red, it's the opposite. There's plenty of realistic downside potential and relatively limited remaining upside potential that would be realistic at that point in time, for the near or perhaps midterm future. And the UDPI has done a pretty good job of calling these low risk and high risk periods in EGLD's history. In late 2020, we see that price spent a good amount of time kind of flatlined there, looking green, showing low risk, and indeed, late in 2020 and into 2021, there was a very impressive run-up. Risk increased, eventually flash red. Interestingly, after you see some gapping on the chart, that can sometimes be a clue that there's a little bit of overextension happening. And then price consolidated for a while and risk came down toward the midpoint. You see it turning from red to orange to yellow there. But going sideways wasn't enough. The market corrected as a whole in May. And, those of us who were around remember this quite well. It was a really harsh drawdown led by Bitcoin, affected alts quite a lot. And then into the summer, risk turned green again, showing another really attractive risk to reward ratio. And since then, we've been in an uptrend. We've especially been in an uptrend since November 19th, and EGLD has been very volatile since then. On the 19th, EGLD started a move that would continue for 5 days, put in 80%, peaking at $550. That was catalyzed by an announcement on the 19th by the Elrond network, announcing a liquidity incentive program of $1.29 billion. Very impressive and appealing liquidity incentive program, drew in a lot of interest. We've been talking on this channel quite a bit about how DeFi utility and potentially other forms of utility, but DeFi is extremely important right now, can drive demand for an asset. We've seen that with quite a few of these layer one protocols that host dApps focus on DeFi. We've seen it with Avalanche and Phantom. We've seen it with EGLD here. We saw it just the other week with Crypto.com coin. So, and then, in the Kronos network. So this is something that is no surprise to see when there's an announcement like that comes out, it can drive demand. And it was no exception for EGLD. 80% over 5 days is not a bad move. I believe the technical term for that is not too shabby. What happened after that? Well, on that fifth day, price peaked at 550 and it's gone into a retracement now. It's pulled back 27%. And as I speak, price is battling with 400, important psychological level. And the question is, what's going to happen here? Is price going to hold at 400 support, or is it going to crash through and keep coming down further? I don't know what's going to happen. I'll be the first one to tell you that, especially not in the near future. But we do have some information here that's useful, especially some UDPI risk information that can give us a clue about what we might expect. But first, there are also kind of macro considerations here. So let me give you a few reasons to consider, that EGLD could continue higher. And I think that this is really going to be most applicable to people who are already positioned in EGLD. If you don't yet have a position in EGLD, I think that there are better risk to reward propositions. The risk on EGLD, the UDPI reading, is currently positive 1.85. So it's 1.85 on a -5 to +5 scale, which is not extremely elevated, as I'll show you in a moment. But there are also plenty of other assets in the space, and we post this information regularly here on YouTube as well as on Twitter, which have much lower risk and have much more upside potential as a result, and also much less downside potential. But that does not mean that EGLD can't continue to run, and I'm going to explain why I think that it's likely to continue to run for those who are already positioned in EGLD and who are thinking about their take profit points. Not financial advice, but this might be useful for you. I mean, the first thing is just the macro situation. Bitcoin went into a correction recently, pulled back 21%, par for the course during a bull market. That's going to happen, every couple of months, if not more often, very likely. And it happened here, and pulled back. It pulled the altcoin market down with it. But yesterday we saw a bounce. Bitcoin seemed to find support in the 53 to 54K region. Pretty nice bounce. The markets as a whole have bounced, and the entire market structure is intact. We did not make a lower low. For Bitcoin, we still have an intact macro scale uptrend. That also matches up with what we know from on-chain data about, supply and demand characteristics of the asset and about the macro price action on Bitcoin. There's every reason to think that the cycle is going to continue, that the bull market is far from over. So that's one thing. If the market as a whole is trending up over time, then we would expect EGLD to do the same. But we want to be more specific than that, right? That can tell us about the crypto market as a whole, but we're also trying to make decisions about EGLD in specific. So as I mentioned, EGLD had a 27% drawdown. So, you could look at that as a second reason to think that EGLD may be ready to resume its uptrend. Nothing goes up in a straight line. After that 80% move, some consolidation was needed, and it's had some consolidation. A 27% pullback over 7 days is pretty substantial as well. It could come down further, but 27% is also nothing to sneeze at. So that's another reason to think that maybe it's getting ready to resume its uptrend. But the thing that I think is most interesting is to look at the upside downside potential indicator, because the UDPI does not look topped out. Let's look at the risk information here differently. So here we have it color coded by risk each day, but on this new graph that I just pulled up, we're looking at just the output of the UDPI. So on the vertical axis here, we're just looking at high risk up on top at +5 and low risk down at the bottom at -5. And so we can see not only where we are right now, but we can see very clearly the trajectory that we're on. And there are a couple of things here that are apparent and I think are important to take into consideration. One is that the UDPI uptrend on EGLD is continuing. Even after this pullback, the risk continues up. It looks like it wants to continue up. It has not rolled over into a corrective move. Even more than that, and this I think is especially interesting, is that we can look at the history of price tops and how they showed up on this graph in terms of the UDPI. And we can see the summer 2020, and then we can see the spring of 2021, and then again, the spring, and then again, more recently, just in the fall of 2021. And what's apparent here is that prices haven't previously reversed at 2. We've seen reversals at 3. We've seen reversals at 5. We've seen a small reversal here in the middle of 2021 around 1. Although I guess you could argue that was, just kind of a continuation of this downtrend from this 5 peak, from that really overextended period of time. But one thing we've never seen is the risk reverse at 2. This gets into kind of a subtlety about how to interpret this, because, increasing UDPI risk can go along with, increasing prices. And as prices increase, the risk is going to increase too. So we would expect to see this uptrend as long as the market remains bullish. It's just that when it gets too overextended, it becomes unsustainable. But we're not in unsustainable territory. It looks like we're in an uptrend, and we're also in an uptrend at a point where we have not seen reversals before. So, you can't take that to the bank. We don't know what's going to happen. But the historical data here suggests that there's nothing alarming about where we are right now. There's been a 27% drawdown. The market as a whole has bounced and is looking relatively bullish. The UDPI is still in an uptrend here, and it's also approaching a level which has not historically been a reversal point. So, actually, if we look at this, if we interpret the 2 level based on this historical data, it actually seems like a bullish signal. Like, reaching 2 might suggest that we have farther to go, that maybe we should be looking at 3 as the next important milestone, and then see what conditions are like there. If we get to 3 on the risk, then we'll want to see what the market looks like, and that could potentially be a more concerning level. But it could go higher. It's gone up to 5. That could happen again. But that's just some things to take into consideration here. I think that EGLD still looks pretty good. There's nothing alarming on this chart here. Again, risk is sitting at 1.85. Probably not an ideal entry, given that there are some other assets that are well into the negative territory in terms of their UDPI risk. But also, maybe not the time to be fleeing to the hills if you're holding an Elrond position either. So that's what I got for you guys. Hope you find this useful. Remember to subscribe to the channel. And remember, with the UDPI, WAGMI.